good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday evening, the 21st of April, 2025. And the time right now, 6:30 p.m. Central Time. So, my friends, as we look at the market and try to work our way through, as you know, the market today had to catch up from Good Friday, and it did. And it annihilated the markets. It took them down into huge numbers. Now, there sooner or later is going to be a point at which the market's price-earnings ratio in stocks starts affecting these markets, and they start getting their feet under them. I don't know what the number is. I don't know where it's at. We're in a free fall right now. And what will turn the market, because it's been pulled down so much, is the first trade deal the president makes. He hasn't made one yet. The South Koreans are coming into town right now to meet with him, and we'll see what they can do. And remember, they have an election coming up in June for a new president. So as this is all going on, everybody's vying for the president of the United States' attention to get a deal done to go home and get voters to sway over with them. That's going to be very important. In terms of market data, well, let's get to that for tomorrow. And we don't need a blank sheet. We need this sheet. Redbook Group will come out with the retail sales at 7:55. The IMF's going to come out with their economic outlook at 8 o'clock. The Richmond Fed will come out with their monthly manufacturing sector numbers at 9. The South Korean delegation comes in. Tesla's going to report its earnings. That'll be important. And this is earnings season. So I'm just mentioning the big boys. You're going to get Boeing this week also. So you get a lot of important numbers coming out this week, and we will see where they want to carry us. All right. So let's just go right into the charts rather than talk about each market, because I think it's important. This is called a free fall any way you want to go about it. For the week already, here we are, and we're what? As I said, it's 6:30, so we're one full day and an hour and a half of trading, and we're down 2.41% for the week. Remember, when you get big moves on a Monday, you often get an attempt at a Tuesday reversal. How far, how much, I couldn't begin to tell you, but that's Yale Hirsch out of the Trader's Almanac, and you might want to read that to learn about it. Here's another interesting factor. If you knew nothing else and you looked at today's break in the market, just to give you an idea, the market was down today. 128 points in the S&P. If you didn't see all this, you go, oh, this market's falling apart. But this is a daily chart. We were here before into the 4,800 level. We haven't gone back through that. Is that a trade bottom low? That has been a question that I'm seeing market technician after market technician questioning. Will the market come back to challenge it? Often it takes a double test. Some will argue the double test was this day. From that, I don't know. What I do know is the pattern is still one of lower highs, lower lows. That is bearish. The market is under the 18-day average, and the attempt at a rally to get over that 18-day average is over. You now have another leg to the downside. The size of this leg will determine to me what happens. Are we going to go for that low, or was that it? I can't even begin to answer it other than to say I'm bearish at this point in time. Momentum has had its chance to correct. It is now turning down again. Therefore, the bears are back in control of the market. And the next stopping spot, let's get back one here. I think I went too far. The next stopping spot might be the 49.59 level in the market, the lower Bollinger Band. Got that? So trend down. What would scare the market, I think, is if you took out right here Thursday's highs. If Thursday's high was taken out, you would get a lot of technicians saying the market doesn't have the power to go back for those lows. Doesn't mean it's turned bullish, but the bearishness is abated. We'll see. But that's what I'd be saying. In the NASDAQ, the trend is down. The bias is down. Again, we had an attempt at the market. It got thwarted by going up to the 18-day average and ran into the brick wall at that number. Now you're back in a downtrend. The first support, if you can make it, is 17,091. But that, too, isn't down to the lows that you made about 2 weeks ago. Keep that in the back of your mind. The Dow, same thing. Look at that low. Momentum shifted back down. Again, the bear market rally, and that's what I called it all last week, ended up not able to go anywhere, ran out of its momentum at the 18-day average. It's reasserted its bearishness, but if you don't take out those lows, you're going to hear these arguments by some technicians, and I see it, that maybe a trade bottom is in, the worst of this break, or the consolidation period of the break has to begin. Could be either of those stories. The Russell couldn't even get towards the 18-day average. It is just one sick puppy down here. Keep in the back of your mind on all of these charts that if you take out Thursday's highs, abate that over bearishness that you might have in the market for the moment. The market might go into the consolidation phase at that point. In the DAX, look, you tried sticking your head up today and a complete failure. So we had an outside day down. I'm not going to call it a key reversal. It didn't make the highest highs of the move. Some could call it that because on this particular rally, it was the highest high. And until this high is taken out, the market is saying, uh-oh, I need a break. And that's basically it. Is there anything bearish here? Not really. Because the support's the 18-day average, you'd have to get back all the way under here of 35.54. You have to break that number to tell me that the market is bearish again. You can consolidate and keep the move going from that point. Then we get to the 10-year notes. Now, the market has been fighting a couple of days here, 3 of them, 4 of them actually, right at the 18-day average. Early evening tonight, you're not doing much of anything. You're up a half a point, but the market's not trending per se. It's got a higher high, a lower low, and a battleground of the 18-day average. The 2-year note is trying to say it wants to be friendlier, the market. Why? Because whatever the Fed does, if it does anything, affects the 30-day, the 6-month, the 3-month, the 1-year, 2-year, much easier than a 5-year out note, a 2-year out note. You got what I'm saying? The shorter the time frame is what the Fed influences. They don't influence 30-year bonds. The overall economy certainly does, but the Fed can make cuts. And the reality is the cut isn't meant to influence the 30-year. It's much shorter in duration. So the 2-year is working on its own thing where you've got the trend down, but the bias is up. I'd call that now the market just churning away here. It re-enters a bear phase if it gets under 103.23.5. In the dollar, this is what we call that gorilla glue trade. It's when a market latches onto a Bollinger Band, and at first you get a few days under it. Typically, you don't go more than 5 in a row. Then it shifts gears, gets to the other side, and it doesn't leave it. It just keeps hitting it. That's a super bearish technique in the market. And when that happens, they've caught a group of longs, and people are just trying and waiting for the dollar to give them bounces, and they're not getting it. And they're caught, and this market's wearing them out. The flip-flop is true then in the euro, which is running, as you can see, to the right-hand side of the Bollinger Band and trying to force an embedded reading where you switch over from being overbought to locking in a bull momentum like you did back here. You haven't done it yet. This is a market that's running on hot emotions. I mean, real hot emotions. And having obviously the market closed on Good Friday, things get impacted in a major way. Currency markets stay open most of the time. They're the big boy market. British pound, same thing. You've got your gorilla glue trade. This is much stronger than I thought it would be. And it's not because their economy's doing so good. It's because of the Trump inaction of the tariffs and just how severe they are and the fact that no deal has yet been made with any country. And I think that's important. You know, I keep hearing traders say, well, it could be 5 months before we get a tariff deal made. If it is, you'll be in one of the worst recessions you can imagine. You're going to be in a terrible state. I predict that if it went anything like that, the Trump administration would have to call uncle at some point. So I'm not looking for that time frame. Could I be wrong? I could be very wrong. But this is financial pain for everybody involved, not just the United States, for our trade partners and everybody. And that type of pain gets voters away from you, not for you. So anywhere that they have votes where it's fair votes, eventually it takes hold. We know that we have 4 years of it, with Trump, but there's only really 2 years before he can lose control of Congress if he doesn't make a deal. Going 5 months and destroying the economy and think you can pick it up better from there, I'm not in that camp. In Bitcoin, the market broke away from the NASDAQ. This is super, super important. This is the first time. So the NASDAQ has been plunging. This market was tied at the hip to it. It's broken away from it. Pullbacks are probably now, if you're not in overbought territory, which I would not recommend deploying new money in overbought territory, but I'd say the trader's going to look at this market hard on breaks to try to get long again. In other words, I think the market's broken away and it's trying to stand on its own. In the energy markets, now I have a hard time with this. If the Trump administration makes any form of peace or can arrange one with a nuclear action by Iran to not do weapon-grade uranium, you're going to get more oil on the market. Number two, with these tariffs, do you think economies are picking up? If you think that, why is our stock market falling apart? Why did the DAX reverse course? So these tariffs overwhelm a lot. So I see the bounce here. You know why it's bouncing? Two elements. Number one, the lower prices go, you're going to lose U.S. shale production. At $60, you watch what happens in the United States. Every single article I read from the producer magazine say that is the first inflection point at which they stop producing more. 55, they shut things down dramatically. That's not the way you're going to get it down. So what's the real number? We'll find out. Could oil go sharply lower than that? Of course it could. I mean, if you went into a severe recession, where's the demand for oil? That's what scares everybody at this point. June WTI, I see this as a bear market rally that I think will cap itself at the 18-day average of closes. Same in the Rebob gasoline. Natural gas is still bearish as can be. Take a look, you see that, and there's that Gorilla Glue trade with an embedded reading. So the first hard rallies probably get sold in the market. That might take you to 321.5, about $17 higher to see where it's at. But a more likely real target of problem is here. The 54 to 62, the 18-day average and the 100-day average. Is there a reason to buy? None that I can see. Are the shorts covering? I don't think so. Not in a big way right here. I did a new report for you, an update, if you will, on the dollar index. The last one that I had done for you was on the 19th of February. And in it, I talked what could happen if the market, and I went and looked at the report and listened to the whole thing, that I predicted there, the market was either headed up to the 109, 110 level, which it did. And if it got through that, 114, but if a reverse course, it couldn't afford to get under. And this was in the March dollar index, the 102.50 level. Well, let me tell you, it got under the 102.50 and away you went to the downside. Now, how low might it go? I'm not going to spill the beans here. I want you to take a look at the report. Instead of using seasonality this time, I really focus on price counts, where they're at, where they could go. What's the probability? Are you at a number that's important, or is there another number to the downside? How do you get the report? You go to our website, iraepstein.com. There's also right up here, there'll be an icon. Give it a click, but it's my name, iraepstein.com. Just look on the top left. The report is right there. You'll see it in bright green, currency report. I'm Ira. Hope you take a look at it. The reports are only up for 3 days. So they will go off the board on you very quickly, and I'm going to put up another report probably on Thursday. You have yourself a great evening. Catch up with you tomorrow.